Hi, good morning, everyone. So welcome to our daily briefing today. So today is 4th November, which is Thursday. So let us start our daily briefing by take a quick recap on previous important economic data. So the first one is UK market CIPS composite PMI final October. Previous is 54.9 and the forecast is 56.8, but the actual is 57.8, which is slightly higher than the forecast. So this is actually a good news for GBP. And then we go to the next one, which is the US ATP employment change October. So previous is 523,000 and the forecast is 400,000, but the actual is 571,000. It's a lot higher than the forecast. So this is actually a very good news for the USD. So let us take a look on the market graph here. We can see that the US dollar index rise up yesterday because of this important economic data, which is the US ADP employment change. Okay, then we go back to our PowerPoint. And then the next one, which is the US ISM non-manufacturing PMI October. So the previous is 61.9, forecast is at 62, but the actual is 66.7. So it's actually a lot higher than the forecast. So this is another good news for the USD. Then we go to the next one, which is the US EIA crude oil stocks change 29th October. So previous is 4.267 million and the forecast is 2.225 million and the actual is 3.291 million. So this is not a good news for the WTI crude oil price because the actual is higher than the forecast, which means the stocks is getting a lot higher than the forecast. Okay, so we go to the next one, which is the Fed interest rate decision. Previous is 0.25%, forecast and actual also the same. The interest rate decision remain unchanged. So after this important economic data release, we can see that we go to our market graph here. So after this important economic data release, the US dollar index fell last night from 94 to 93.8 at late trading. Okay, so we go back to our daily briefing here. Okay, so we go to the next part, which is the previous day market volatility recap for gold. It's declined 270 pips and then rebound. As we can see here, it's inside the red rectangle here. Okay, so what happened on the gold market last night? So let us read the factor here. So the price of gold remained near the lowest level since mid-October on Wednesday. So spot gold closed down 1% in late trading to $1762.82 per ounce. So, and it fell below the 1716 mark earlier at the lowest level since October 13. Okay, so the Federal Reserve, as generally expected, announced that it would reduce debt purchases. So they begin their reduce their debt purchases begin in this month. Okay, so we go to the next one, which is the WTI crude oil. So it's declined 300 pips yesterday. So what happened on the crude oil market? So let's read the factor here. So oil prices fell sharply. US oil once fell by more than 5%, setting a new low in the past 3 weeks to $79.69 per barrel. So previous reports showed that US crude oil inventories increased and Iran say it will resume nuclear negotiations this month. So we can see that the crude oil fell again because of last night, the EIA crude oil stocks, because the stock is getting more than the forecast. So the crude oil price fell again. Okay, so we go to the next part of our daily briefing today. So in EU session today, we have to focus on this important economic data. So let us take a look on the first one, which is the Switzerland consumer confidence Q4. So previous is 7.8 and the forecast is remain unknown. And it's going to release at 4 o'clock later, so in the afternoon. So if higher than previous reading should be taken as positive for the Swiss franc, while a lower than previous reading should be taken as negative for the Swiss franc. Then we go to the next one, which is the UK Construction Pmi October. So previous is 52.6 and forecast is at 52, and it's going to release at 5:30 in the evening later. So if higher than expected reading should be taken as positive for the GBP, while a lower than expected reading should be taken as negative for the GBP. And then we go to the next one, which is the Bank of England interest rate decision. So previous and forecast is at 0.1%. So highly they will remain their interest rate decision remain unchanged. So the this important economic data is going to release at the actual is going to release at 8 o'clock tonight. So if higher than expected rate is positive for the GBP, while a lower than expected rate is negative for the GBP. And then in EU session tonight, we have to focus on this important economic data. So especially the first one, the US initial jobless claims. So let's take a look on this one. Okay, so US initial jobless claims 30th October. So previous is 281,000 and forecast is 275,000. And it's going to release at 8:30 tonight. So if higher than expected reading should be taken as negative for the USD, while a lower than expected reading should be taken as negative, positive for the USD. Okay, then with the next one, which is the US balance of trade September. So previous is negative 73.3 billion and forecast is negative 80.5 billion. And the schedule is at 8:30 tonight, same as the initial jobless claim. Okay, so if higher than expected reading should be taken as positive for USD, while a lower than expected reading should be taken as negative for the USD. And then we go to the next one, which is the Canada balance of trade September. So previous is 1.94 billion and the forecast is at 1.55 billion. So the schedule is same at 8:30 again tonight. Okay, so if higher than expected reading should be taken as positive for the CAD, while a lower than expected reading should be taken as negative for the CAD. Okay, then we go to the last part of our daily briefing today, which is the market update for gold. So the resistance level of today is 1785 and the support level of today is 1764. So my personal opinion, I will take it as a bullish for today because it bounced back from the low level. Okay, so let's read the market trend factors here. So why I will take it as a bullish, as a rebound to around 1780 to 1785 here. So let's read the factors here. So the strong economic data in the United States and the stock market record highs hit the gold price boost. Okay, but the weakness of the US dollar continue to support gold prices. Okay, so the Fed will launch its debt reduction plan in November, I mean in this month, so to reduce the size of its monthly asset purchases by 15 billion. Okay, so we'll accelerate the pace of debt reduction in next month, which is December. Okay, so prepare to adjust the pace of reducing the scale of firm purchases when necessary. So Powell said that after announcing the reduction in debt purchases, officials may remain patient in raising interest rates. But if the inflation situation develops to the point where action is required, the Fed will not sit back down. Okay, so they will take action. I mean, okay, so the price of gold is currently in a volatile downward phase, but it may rebound, but it may still rebound in the day. So that's why I would take it as a rebound here to the price 1785 here. So focus on the initial jobless claim data and the Bank of England's decision in the day. So that's all for our daily briefing. So wish you have a great day and see you again. Bye bye.